Greetings, my name is Dr. Jeffrey Scott, and this is my daily pre-market update for Market MRI Pro for October 16th, 2024. For any questions about the process, the product, you can email me at marketmripro@gmail.com. Just the usual disclaimer, Market MRI Pro is a new tool that I've just put into beta testing. This is for educational purposes only. Any recommendations that come out of my analysis should be taken in the spirit of education and not considered investment advice. The intent of this video is to demonstrate some new tools for top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make, and I may own or intend to sell any stock I mention in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. Now, I would also point out I am sitting on a cruise ship somewhere outside of Osaka, Japan, and so I might expect the speed as I switch to be a little slower than you'll experience on your own. Now, the first page I always look at is to get a sense of the market, and I have created a market timing tool. Now, it is available in multiple platforms, and it's one you can even create on your own, where I combine a tool that I created with some friends called the Bongo, which is a trending indicator, blue being bullish, red being bearish, with a WMA, which is 30 periods. This is a weekly chart, so that means it's a 30-period weekly WMA, and it's a weekly Bongo. And then there's a relationship between price, the Bongo, and that WMA. Down on the bottom, you can see the current signal. And the first thing you notice is that the spider, the Qs, the diamonds, and the Russell are all in a weekly buy signal. That's the dominant signal I use as part of my top-down analysis. You will also notice that this green line, which represents the 3-month new high, new low for each of these indices, is pointing up, but you could see it's at 96% on the spider, and we're getting to a level where you might expect it to reverse, as it's reversed every time to the left. Not quite on the Qs, not quite on the diamonds, but also getting to a level on the Russell. Now, when I see that, it makes me realize that we don't have to pull back hard. In fact, sometimes you could see here's just a little pullback that occurs, but it may or may not be the best time to enter new positions. So you have to take that as a caveat. Now, if I look at the daily model, flip to the daily here. It'll take a second to reset. Gotta love cruise ship internet, don't you? If you look at the daily model, you could see that we are still in a buy signal on each of the 4 major ETFs, that after the sell-off, which was probably led by the ASML warning, which pulled down the semi-space, you could see that the 3-month new high, new low on the daily charts actually turned down some, which is good because it means you're taking off some of the overheatedness. So we've got a buy signal on the weekly, buy signal on the daily. All right, so that's good. Now, the second thing I want to understand is what's working now. So we've created a tool called the Market Briefing, and this here is the breadth view. And what I really look at is what's down here in the bottom pane. I've got a 50 and a 200 daily moving average sitting here. This is a daily chart. And these green dots represent bullish exuberance called the Eureka, or green lines rather. The red lines represent what's called the Phoenix. The deeper the color, the stronger the signal. And the red dots represent the Hindenburg Omen. The Hindenburg Omen is a signal that suggests that you could be ahead of a major top. There has not been a major correction that did not occur after a Hindenburg Omen, but about 25% of the time the signal is significant. Often you get a pullback, but not necessarily the end of the run. So you could see on the NASDAQ, we are working our way off of some recent Hindenburg omens that both the NYSE, which is just off all-time highs, which it set on the prior bar on Monday, and the NASDAQ, which has not set an all-time high, are both in a level that could look to be extended. The buckets view is a tool that takes every stock in these indexes and asks, what is the percent B? Now, if you assume that the percent B ranges between 0 and 100, and you can take 10 slices, and this is the Bollinger Band width, so you have 1 through 10 represent the bottom 10%, the second 10%, and so on and so forth. And the 0 group represents how many stocks are below the Bollinger Bands, and the 11, how many are above. And you could see the skinny, let's turn off the weekly because that's less important right now. The gray represents where it was a day ago, and the red and green represent where it's at today. So you could see across the board there was a little bit of weakening in the markets on Tuesday with increasing number of stocks setting up below the Bollinger Band. Now, I don't pay attention to 4, 6, 8, or 10. When it starts to be 25 or 30% below, I know there's a reversal imminent. When it's 25 or 30% in that 11 bar above, there's a reversal imminent. But it does give you a sense of what the market is doing and how broad the participation is. And then we have the performance view, and we'll start on the right-hand side. That looks at the S&P 1500. You could see in blue that 7 out of 11 sectors were positive on the session, compared to the prior session where 10 out of 11 were positive. In the S&P 1500, you could see somewhere around 60, 65 of our industry groups were positive, compared to over 100 in the prior session. If you look at the average stocks, they were about 50-50, a little bit positive here. And if you look above the midline on their Bollinger Bands, 64%, I believe, of stocks are above the midline. So we're in a nice uptrend, as shown by above the midline. Came off a little bit of the extension that we saw on Monday, but still a very bullish looking picture. You could see on the NYSE, the advancers were less than the decliners as we dropped below 50%. And however, more than 50% of stocks are above the midline. And on the NASDAQ, about 50-50 advanced decliners. And you could see that on the NASDAQ, over 50% are above the midline. So I would put that as mostly bullish. Over here, you could see the one-day close on the various market ETFs. And you could see the leader on the session were the small caps. You could see over here the range. This is the percent move from the low to the high of the session. And you can see that closing ranges, how close to the top or bottom did we end up. And you could see that the Russell ended up 32% of the range of the session. Everybody was less than that. Not a super strong session on closing range, and certainly when you look at the one-day performance. If I want to look at the one-day change, up at the top, easier to see, we have the S&P sectors, and we can see on one day, put that down, that the leader was real estate, followed by staples and utilities. Kind of a defensive-looking day. And we know that energy has been selling off, especially as more and more people don't expect Israel to retaliate against the energy infrastructure of Iran. And with that ASML warning, technology fell. Now, the interesting thing is technology dropped from the open. This here is the entire move of the session. And when you see a big change from the open, it tells you that even after the market opened up, there was further move in that direction. Another thing I might want to do is to look at various categories, of which I have 41 today in this tool. And we could see up at the top was retail and gold miners, telemedicine, silver miners, leisure and entertainment, and you could see what things were moving. And on the bottom, you can see China, discretionary, semiconductors, and clean tech. Clearly some rotation going on, especially among those semiconductors on the bottom and retail on the top. Okay, so I've now looked at the markets, I've looked at some breadth indicators, and I've got a sense of what's working from the various industry groups. Now I'm going to take you into the ratio charts, and this is something that I've used to great benefit in other programs such as wealth charts, of which my tools are also incorporated there. And that's another wonderful program that allows you to do what I'm showing you here in this session. This is the big leader. What I'm looking here, and this is Bitcoin, the rest of these are the S&P sectors, and they're all 1 hour ratio charts looking at the performance of the tool, the sector versus the spider. So the strength in the market is going to be pointing up here, and you can see how industrials has been doing well. Staples, which have been pulling back, bounced in the last several hours, as did utilities. And when I find retail, you'll see the same thing. And over here is materials. And you could see energy weakening, financials improving, healthcare has been very weak. So I can look at this and get a sense of the leaders in the market, which is clearly over a period of time has been industrials, what seems to be bouncing, staples, utilities, and real estate, the defensive plays, and that financials has been looking good as well, and communications, discretionary. There's been a lot of strength. Now, you might ask, well, how can there be positive things on a day when the market was negative? This doesn't mean that anything was positive. It means that the relative strength of an individual sector versus the spider on the stronger items, the ones that are moving up on the session, is greater than the spider. They could both be down. They're just down less. So I've got a good sense in my mind of what I'd be interested in the market. And based upon these charts, looking at real estate, that's one of the things that comes to my mind. So now I want to go to what I call the JAS layout page, which is basically my go-to charting tool, to my basic chart scanning tool and the different features that we have built in Market MRI Pro. At the top is a proprietary indicator which looks at extension to the upside or downside. Think of it as an oscillator from plus 100 to minus 100. When it gets above plus 95, I consider the market to be extended to the upside. And when it gets below minus 95, I consider it extended to the downside. Why is that important? Because you don't want to necessarily be buying extended stocks, nor do you want to be shorting a stock that's extended the most to the downside than it's been in the last, say, 200 bars. So I look at the value. So here's Groupon, just as an example, not a very pretty chart unless you like trading off support and selling resistance and just going sideways. At minus 24.85, it's neutral. The next here is my weekly bongo. Being red tells me I'm in a downtrend. And the fact that the daily bongo underneath, which turned blue, says, hey, we've got a short-term uptrend. In the charting window, you've got regular volume bars. You have a 17-day in green, 50-day in white, and a 200-day moving average in red. And then you have, think of this as my EKG for the stock market. As a physician, we can measure electrical impulses coming from the heart by putting leads in various parts of the body and measuring electrical activity. And that gives a sense of the health of an individual's heart. I've created a tool here that includes a series of dots and indicators that gives me a sense of the health of a chart. In later videos, we're going to discuss further the dots and then the two trading signals at the top. But consider blue and green to be bullish and red to be bearish. And what I look for is patterns like we see here of good volume, a lineup of the dots, a breakout as an interesting buying opportunity. Well, you can see on Groupon, we actually have the dots. And just to give you a sense of what we're looking at, we have a PSAR that's favorable. Then we have a momentum, which just changed from negative to positive. Then we have a breakout dot and a volume dot. So I know there are a number of positive things occurring in Groupon. Now, this is not my kind of a stock. I don't like buying things that are in downtrends and below their moving averages. The next thing is looking at the relative strength of the instrument versus the spider, and then we stick a moving average on that. So the signal line, which is the relative strength versus the spider, is the green. The blue is the moving average. And I want to buy instruments that are outperforming the spider. So I want them to be positive. So they're green when they're above and red if they're below. And lastly is the on-balance volume. Need a little formatting fix here. But the on-balance volume here is going to be looking at on-balance volume versus a 10-period exponential moving average. And again, I want to buy it when the OBV is above the exponential average. And you can see it's green here. So these are the constellation of signals that I use as I start thinking about what stocks I want to buy, when I want to buy them, and how I want to manage them. Over here, it says the JAS list, and the JAS list basically combine the NYSE, the NASDAQ, and the NYSE Amex, and then put a $1 and $100,000 filter on it so you eliminate things that aren't trading, and you end up with about 3,300 stocks. So this is a very broad list, and I'll show you why I use it and how I scan with it. You could also look at a list of weeklies, or if you want to trade stocks in the Russell 1000 or 2000, maybe just the S&P 1500, maybe you want to look at the NYSE or NASDAQ, maybe you're an ETF trader, the S&P 500 or the NASDAQ 100. I'm going to look at the JAS list because it's the broadest list that I have and one that is already pre-filtered on price and volume. Now, personally, and this will be in the next release, I would like to eliminate all stocks below $5 and below 500,000 shares and all stocks below the 200-day moving average from my deeper analysis, and we're building in, and you'll see them in the next release, a filter for that. So here's a list of stocks. So I can do many things with this list. One thing that I've learned over time is some of the biggest moves up occur when the dots start lining up. The biggest moves down, okay, occur when the dots start lining up to the downside. So you might want to scan for how many dots are up, how many dots are down. All right, then you might ask your question, what about these bongos? So there's a daily and a weekly. When it's green, it says it's up. So let's just look at Charles Schwab, for example. And the updates here, again, because I'm on the cruise ship, are a little long. You can see Charles Schwab, the weekly has been positive for 2 weeks, and the daily has been positive for 8 bars. So we're positive on the bongos. It's got 3 dots up, and you can see the change percent. Over here are 3 different ranking tools of momentum with different time frames. Do I want the ones that are moving the most right now? So the highest momentum stock in the market, which looks at 2-day performance, was IMRX. I don't like it because it's below the 200, but it had a pretty big move, 15% move. The actually, let me do one little adjustment here. Let's try that again and see if CRNX comes up to the top. I had to turn off one of the other filters, and you could see the massive move it had on the short term. Okay, If I look at a more intermediate term, the 5 period, and I look for what's the strongest been in the market, on the more intermediate term, I get long-board pharmaceuticals, which you could see a massive move up. And you could see how this thing has had a great move here, and then it was a takeout earlier this week. And then I look at the on-balance volume if you want to see things that broke above in this session. And then the relative strength versus spider on the daily and the weekly. And I can scan for them. I got a formatting with this resolution, my monitor that I can adjust, but this is would show you how many bars since you changed on the weekly as well. So you can just scan by ordering the stocks based upon your criteria. I also have created a number of short-term scans, pullbacks and uptrends, retracements and downtrends, bottom fishing candidates, rockets, and some of the other signals I like that I could sort with. But I'm a top-down guy. I'm a top-down trader. And what I like to do is I like to flip over here on this top-down button and notice that the sectors pop up here right away. And these sectors are being populated by the JAS stocks. Most of the stocks in our marketplace are assigned an industry group and a sector. If I rank these by short-term force, the top performing group is real estate. If I click on real estate, give it a second to run, what happens is all the stocks, there's 190 of them, in the real estate category line up here. Now, in this list, I could rank them by short-term momentum. The JF stands for Jeffrey Force. And then I could look at the stocks that pop up here. For example, SBAC. I like this one a lot. Here, I like buying pullbacks in an uptrend. What you see here is a stock in a pretty nice uptrend with a pretty big pullback and a breakout. You see massive volume. It began a new trading signal buy called the EMS model. The CPR was positive the session before. And I've got a volume of breakout momentum. This yellow line says I'm coming out of a squeeze. And then my relative strength and OPV are green. That's a very attractive setup. When I look up here, I see 91.48. It's not to the point where it's too late to buy, but it's extended. Maybe I can find one that looks just as good. That's not expended. All right, I could turn off the Jeffrey Force, the momentum tool. Let's look at up versus down. And let's look at KRG, Kite Realty Group. Now, I'm done. This is the exact setup that I like to trade. Here is a stock with a nice uptrend, a pullback to what we were taught by one of my mentors, Ian Woodward, as being a pullback to the 50. The 50 is called free parking. And then we broke out here. Good volume. CPR is positive. It's a new buy signal, as well as volume breakout momentum and the PSAR flip. Now, what's not perfect with this one is just the concern about the OBV has not flipped yet. All right, I like perfection. Maybe we can find perfection if we keep looking. Now, over here on the different industries within real estate, and you can see all of these were up, we could look at REIT specialty, office, and let's look at this real estate developers. Let's look at the top 3. So now we're down to 43. And we can start to look at what comes up to the top. EQIX, expensive stock, probably too expensive for most people to be going out and buying a lot of a $878 stock. But this, again, uptrend, pullback, and breaking out here is the pattern that I'm searching for. Now, you notice that along the side here, I have little boxes. And I could start checking out the ones that I like. And I hit the plus, and it's going to get put into my list, as you'll see in a moment. I might decide just to go back to the impulse list. And as I told you before, I have a number of pre-built scans. Let's pull up the 2-day up K-force. Again, all these things I will explain over the next week or two as I do a series of these. And I might elect to click off a number of these. I turned it off by mistake. Let me put this back on. Two-day force will be stocks that have had a big move momentum-wise 2 days in a row, and I've learned that these are some of the more attractive. And actually, I see on this list one that is my pick for the morning. It's on Wednesday. So I'm going to add these to the My list. Now, this is more of a bottoms-up approach because I'm not limiting myself to just real estate. Close the fundamentals for a second. So now let's go back and let's look at my list. So these are some of the stocks that I identified. Now I could run various scans on them or other tools that I might want to. Any of these pullbacks in an uptrend? Let's see, probably all. Okay, so let's look at NNN as an example of an attractive stock from my perspective. Uptrend, pullback to free parking, and a breakout. We're at 67.33 on the high jump, so we are not extended. We had good volume. This green dot here signifies my EMS trading system, my CPR signal the day before, and then volume, breakout, momentum, 2 momentums in a row, which to me has been a very effective signal, coming out of a squeeze with a PSAR reversal with relative strength and OBV both favorable. This is a stock that I will be looking at in the market on Wednesday. Hope you like this introductory tour of stock market top-down analysis with the Market MRI Pro tool. I'll be posting daily videos, especially when I get back from my cruise, but I'll try and do them each day to give you a sense of what I'm looking at in the market. And lastly, I know a lot of folks like TradingView. So do I, because you connect to so many brokers. They got great data feeds. It's a low-cost platform. Well, if you hit this open button, you make the magic happen. Because what's going to happen is I'm going to open up that same chart, this National Retail Properties, in my TradingView. And these are all, let's see if I can make this look better. A lot of trend lines are written here. Let's play around a little bit. And so here is the stock chart. I've got seasonality as an indicator that I include. My dots, here I include a weekly as well as a daily, looking at the relative strength versus the spider, the fundamentals. So if you prefer to use TradingView, you can go directly from my Market MRI Pro tool into TradingView, especially if you hook that up to a broker. Have an awesome day in the market on Wednesday, and we'll see you Thursday morning.